Hi guys, welcome back to the channel. My name is Dave, and today I want to talk about this article on Seeking Alpha. It's titled, Globally Listed ETFs Attracted Over $75 Billion of Investor Capital in November. But more importantly, it details which ETFs have the largest inflows. So that's kind of what I want to talk about, because I think it's important to understand where people are putting their money. And this is back in November, of course, when the market was on a little bit of a rally. December, a little bit of a setback so far. We'll see how we finish off the year. But as we scroll down through here, and excuse me, I'm a little bit nasally at this moment, so hopefully this sounds all right. But in total, the worldwide exchange traded funds FEAR together amassed $78.58 billion in the month of November, which is kind of in line month over month, right? Because all together, we've had $786.93 billion this year to date inflows, which breaks the total market of $9.48 trillion at the end of November, compared to $8.87 trillion at the end of October. So a lot of money invested into these ETFs. Very popular way to invest. We all know that. But what I find more important is what we see down here. So I'm going to scroll down here to the bottom, and we'll start talking through what these top 10 look like. And you won't be surprised that a lot of people are moving to cash, finding ways to protect their money. So that's where we start with number 10, the iShares National Muni Bond Fund with $1.38 billion invested. So I see people putting money into muni bonds. I was actually thinking about doing a video just on municipal bonds. Again, tax-free bonds, especially if you buy them in your own state. So great way to go about it to protect some of your capital and put a little money in your pocket, especially if you're a high-income earner, something like a muni bond ETF. And coming in at number 9 is the iShares Core US Aggregate Bond ETF. Again, AGG with about $1.5 billion. People are looking to protect their money. They're putting it into bonds. They're collecting that 2%. It's a monthly payer. Not glamorous, but it's protecting their capital as they look off into 2023 and stare down at the abyss trying to figure out what's going to happen next. Number 8, JP Morgan Equity Premium Income ETF, JEPI, with about $1.6 billion of inflows. This is one we've talked a lot about on this channel. We kind of know the format here, right? Is they're going to distribute, right? Not dividend, distribute lots of money every single month, monthly payer. People love that. And because it's got this basket of low volatility stocks, hopefully, if we just have maybe a slow decline, it might hold up pretty well. So lots of inflows with JEPI and a kind of a fan favorite. I know I own a lot of shares. I'm really not adding to that position at this moment. I'm still doing some due diligence myself with JEPI, but lots of big fans of it, and I still have my shares. Number 7, iShares, ACWI. So this is one that owns a bunch of technology, things like, it's got Apple, Microsoft, Amazon, Alphabet, Tesla. Sound familiar? But for whatever reason, somebody's put a lot of money into this. Not necessarily one person, but $1.6 billion into ACWI, which has a little bit. Let me see here. We've got an expense ratio of 0.32, a dividend rate of about 1.8%. It's got about $18 million in assets. So I don't know why. I have no clue. Can you tell me why? I'd love to know. If you have the answer, please let me know. Coming in at number 6, Schwab US Dividend Equity ETF, SCHD, at $1.63 billion. Again, a very popular ETF. SCHD is, again, another fan favorite. If I want to get a lot of views, I just have to mention SCHD and buy and hold forever, something like that, and you get a great combination. But I don't think people want to hear that every single day from 8,000 different people on YouTube. So I go other places. But anyway, SCHD, it is a great ETF. I own shares of SCHD, and I continue to add to this position. So it's a core holding for myself in the ETF space. SCHD, a great ETF. I really like it. And again, we've talked about that one. I've done a review. I'll link it up above. And number 5, iShares Russell 2000 ETF. This is IWM. So with IWM, you're going to get, it's the Russell 2000. So you're going to get about 2,000 stocks. Yield of about 1.5%, expense ratio of about 0.2%. It pays out every quarter. And not a bad way to go, too. To balance out your fund, depending on how you want to set yourself up, IWM is a very popular ETF to go to. Coming in at number 4, Vanguard Tax Exempt Bond ETF, VTEB, at over $2 billion of inflows back in November. So again, tax exempt municipal bonds. So again, if you're in a high tax bracket, you're looking for municipal bonds, this might be one way to go. It pays out every single month, low fee, and a little bit less than JEPI, but it's a monthly one. Everybody loves these monthly ones. So lots of bond ETFs like this that are paying out every single month A low yield, but again, tax exempt. Number 3, Vanguard Short-Term Corporate Bond ETF. $2.4 billion into VCSH. Again, this is going to be yielding maybe just a little bit over 2%. It's yielding 2.15%. It's got $48 billion in assets, pays every single month, 0.04% expense ratio. And I mean, again, they're just talking about more corporate bonds here, but in this case, short term, so you're not going to get a whole lot. Versus number 2, which is the iShares iBox USD High Yield Corporate Bond ETF. So HYG is going to be a little bit of a different monster here. This one's going to have a pretty high expense ratio of about 0.5%, 0.48. Again, paying out every single month, but a pretty high dividend yield of 5.23%. You got to risk it for the biscuit, right? So you're going to be paying for that. There's going to be some risk there. It's not like free money. So see how that holds up in a recession. But got $18 billion in there. So, but pretty significant inflows with $3.63 billion going into high yield corporate bond. So still faith in high yield corporate bonds. So looking for a higher yield, then you go for something like this. And finally, number 1, Invesco QQQ Trust, $4 billion invested. Now this is a very popular one. People put on auto invest, they buy it every single month, so that takes care of part of it. I would not be buying Invesco QQQ right now. I would be buying that in 3 to 6 months when we start seeing some new lows or we start getting down there. That's my personal opinion. I'm actually short QQQ right now. That's a lie. I'm not short QQQ, but I have sold naked calls against QQQ that I keep rolling down. There. That's where I sit with QQQ at the moment. So I wouldn't be invested in that. But again, that was November and we're in December now. So things change rather rapidly in our economy right now. Everybody's kind of looking and reacting very quickly. But those are the top 10. I find that really interesting to have that information and kind of look at that. So which one you like? Let me know down below which one you like out of these 10. So out of those top 10, the 2 that I'm most invested in would be JEPI and SCHD. I think the Russell 2000, I've got a little bit in my M1 account, my goofball account, that you see over there every now and then. But aside from that, I'm not really into the bonds, but it doesn't mean I'm not willing to look at bonds. I'm actually going to do a video on municipal bonds coming up. So anyway, any questions on any of this, please ask down below. I really appreciate you watching. Please like and subscribe if you like this kind of thing. We'll see you real soon. Thanks. See ya.
A fucking goat outside.
It's just a goat.
No, it's a fucking goat.
Meh.